Welcome to another Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the deferred sales trust is an amazing way for you to exit highly appreciated multi-million-dollar assets, regardless of what type of asset you're selling. Will it be crypto, businesses, or real estate? So you can defer that tax and invest at optimal timing and create and preserve more wealth, or help your clients, friends, and families do the same. We're also streaming on expert CRE secrets as well for all the commercial real estate folks out there that are listening and watching on YouTube. We appreciate you being there. For those who don't know me, my name is Brett Swartz, and I'm founder of Capital Gains Tax Solutions. In each and every episode, we bring in some of the best business, real estate, finance, and sometimes crypto minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. Hey, I'm excited about our next guest. He's originginally from the Bay Area, Petaluma area, Santa Rosa. He actually studied at UC Berkeley. He has 14 plus years leading teams of 10 plus, managing budgets of 5 plus million, optimizing $100 plus million programs. He served notable organizations such as Citi and Saks Fifth Avenue, working in software, media, financial services, real estate, and cryptocurrency. And the key here is his diverse experience in fintech drives his dedication to nurturing the role of blockchain within the regulated global financial system, and so much more. Please welcome to the show with me, out of Manhattan, New York, David Doss. David, how you doing?
Good morning, Brett. Thank you for having me on the show.
Absolutely. For our listeners getting to know you for the first time, would you give us a little bit more about your story and your current focus?
Yeah, so like you said, grew up in Northern California, but I think one thing that was kind of unique to my upbringing was that I grew up in a very kind of multicultural, multilingual environment. Was raised Orthodox Christian, so that's the Ukrainians, the Russians, the Ethiopians, the Lebanese. So there's a very wide range of different traditions there. And so being really fascinated with the cooperation between different cultures, the kind of interactions between different ideologies was one thing about my childhood that was really engaging to me, as well as learning different languages. And so taking that into my studies in university, I researched civil and social development, and I was really fascinated with bottom-up interactions between different organizations and different groups around the world. Really was fascinated with decentralization before I knew what the term was, and from there gravitated towards security and privacy technology, as well as fintech. And so when you look at international bottom-up systems in fintech with a privacy and security component, you kind of have that blockchain bingo, so to speak, of just all of these different areas that blockchain, Web3, digital assets are looking to kind of help solve for and or help kind of contribute to the global conversation. And so that's where I find what I do to be so fascinating, that there is an ability to interconnect systems and people and societies around the world in a way that is kind of building what we're trying to make into a better mousetrap, so to speak, of a better way to get certain things done.
Absolutely amazing. And by the way, you can learn more about David by going to ckc.fund. That's ckc.fund. And if you're curious what that stands for, it's a US-based private investment fund advisor and operating company. He's going to tell us what it stands for, but essentially they service private digital assets, investment funds managed by, administered by Chain BL XSPC, a segregated portfolio company in the Cayman Islands. So much more there. But really what we're talking about today is blockchain and crypto wealth management. We're going to be covering what's the status of crypto right now? What's going on with wealth management and regulation and such, and building wealth with blockchain and crypto. But David, before we go there, I believe we've all been given certain gifts in this life, and these gifts have been given us to be a blessing and help to others. Some people call them superpowers. I think they're blessings that have been given to us. I'm curious, what would you say is the one or two gifts or blessings that you believe you were given, and how does that help how you help and bless people today?
Yeah, so excellent question. I would characterize myself as a mobilizer. That what I'm really passionate about is kind of connecting the dots between systems and people across different fields. And so that kind of ties in, Brett, to your question about what CKC stands for. So that is Composable Knowledge Collective, is the overall group under which we run, which includes Composable Knowledge Capital. And so, to that point of mobilization and composability, that's part of why I am so interested in this blockchain and digital asset space. Is that ability for this technology to be a building block that helps mobilize different units of value. And so, ultimately, from a digital asset investment and wealth management perspective, that comes down to a question of fundamental value of the different utilities that digital assets can help provide to the global conversation.
Amazing. And so let's dive right into that. So, what would you say is the number one secret to building wealth with blockchain and crypto wealth management, and as it pertains to even today's marketplace, given the uncertainties with so many asset classes and the devaluing of the dollar that we've seen just decimated in the past few years? What is your take on all this?
Yeah, there are many answers to that, I suppose, but a few main points that come to mind. For one thing, all assets carry risk, right? And so, what our focus is in the digital asset space is to help provide a vehicle whereby digital assets can serve as a hedge against volatility in other markets, right? So we're not here to say that one asset is better or worse than any others, but what we are fascinated by is the ability for digital assets to smooth out and kind of reduce risk in an overall well-rounded portfolio. So when you look at what surveys have indicated from family offices, high net worth individuals, other sophisticated investors, when you also look at systems such as modern portfolio theory, a lot of this type of analysis will find that a small allocation of somewhere around 4, 5, 6% of a person's overall net worth into emerging alternative assets such as digital assets can help provide a asymmetric opportunity where there is overall small risk to an individual's or an institution's overall portfolio, but an ability for that allocation to succeed in markets where other traditional assets such as stocks or bonds or real estate have been taking a beating. And also in its status as an emerging asset class, there is ability for that small portion of a portfolio to do at kind of an outsized level of heavy lifting on some very, very strong growth potential. So for example, thinking through, if an individual had $100 million portfolio, just for sake of easy math, and if, for example, $5 million of that were in an emerging digital asset class, or an emerging asset class such as digital assets, if that position were to go to zero, that person would still have $95 million, right? But if that position goes to, let's say, 10x or 100x, then that person or that institution is in a far stronger financial position than they were at the beginning. And so, providing that type of exposure to upside in a way that mitigates the downside is something that we are focused on. So when you think of, for example, something like Bitcoin, it's only one of a wide variety of different digital assets out there. And so when you think of other asset classes like stocks, most people, they would not just, if they were investing into stocks, would not just go and buy any one stock, regardless of how good it is. They would invest across different stocks. They would diversify. They would conduct research, asset evaluation. They would build out overall positions, and that's the sort of consistency and discipline that we're looking to help provide to this emerging space.
Amazing. So it sounds like the first secret is to understand that the ability to use and invest into digital assets can help to reduce the risk and have a more rounded portfolio and smooth out, during maybe some more challenging times, and help to provide a hedge against, more challenging times as well. On the other side, have an asymmetric opportunity where you're risking a smaller percentage of your portfolio, but the upside and the opportunity is enormous. Is that a fair summary for the first question, David? And then after that, what would you say the number two secret is to building wealth with blockchain and crypto wealth management?
So yeah, I mean, to your point, Brett, viewing as an asymmetric opportunity as a hedge is one kind of major area. The other being the diversification aspect. So, back to that example of stocks, what a lot of wealth management will focus on in more traditional markets such as stocks is they will diversify across different use cases, different segments of the stock market, high cap, mid cap, low cap, across different industries, technology, um, consumer packaged goods, etc. And that diversified portfolio will help to essentially smooth out some of the volatility within the overall asset class itself. So preparing and properly managing a risk, not just across markets, but also within a particular asset class, is another key component.
Okay, excellent. So diversification is key, right, to any I think healthy wealth balanced investing in cryptocurrency and digital, and doing that within the digital space of emerging assets is what you're sounding like. And so I guess let's dive right into that. Like, so what does CKC Fund, your guys' company, do if someone's interested in, like, okay, yeah, I know I've been wanting to get into crypto. It seems like it's a good time. I'm ready to diversify. I'm ready to get some asymmetric opportunity here. What would you guys provide, and how does that work, David?
So we ourselves, we are not financial advisors to any one particular individual, but what our role is to serve as a advisor to private hedge funds, and so our focus is on building out fund fund vehicle ecosystems where we can help uh, a, a particular institution to or group of investors to grow their wealth. What we focus on in particular is vehicles in the Cayman Islands, which is for a variety of reasons. But first and foremost is the regulatory and compliance framework within which we can operate, both from a fund perspective and from a digital asset perspective. So, Brett, you mentioned a little earlier how there are regulatory concerns around blockchain digital assets. There are also regulatory concerns around investment funds, and so looking at those two topics. For one thing, we've found that the Cayman Islands has an extremely robust digital asset regulatory framework compared with a lot of different other nations. And then we've also found that they have a variety of very strict requirements for these private investment fund vehicles, where they require third-party auditors to come in, auditors that are accredited to evaluate publicly traded companies must be used to audit these private investment funds. So the level of clarity on this emerging digital asset class is something that we find very strong, as well as the level of oversight and rigor on the investment fund piece in Cayman.
Okay, excellent. So it sounds like you guys serve as an advisor to hedge funds. And so someone might invest with that hedge fund, and then you guys would be on the back end servicing the hedge fund to help them make, that allocation for that percentage of wealth into the investments. And you guys happen to do in the Cayman Islands for regulatory and compliance strategy purposes. Fantastic. David, let's shift a little bit. I want to talk a little about capital gains tax, and it sounds like you have some background in real estate and obviously some background in businesses and such. So I want to start with first, and then we'll dive in. And actually, we'll just dive right into cryptocurrency. What would you say the biggest frustration is with capital gains tax as it pertains to exiting cryptocurrency that you found, and also talk about just timing, right? When markets go high, markets go low, people want to get out, but they don't want to get hammered with the tax, and maybe they hesitate. Kind of tell me like what you feel like the last, from the last crypto crash when Bitcoin was, let's say 69,000 and it crashed down and everything else kind of with it too. Give us kind of that overall feel of, when you go to exit and capital gains tax.
Yeah. So it's a can of worms question. I would say that, it's definitely changed even over the years. So many years back, I've been involved in blockchain and crypto for going on 7 years now. And in the 2010s, at a certain point, the tax laws, for example, in the United States were different around digital assets than they are today. And, likely things will continue to evolve in the United States as well as in various other countries. But one notable consideration around this is to your point, Brett, capital gains in general, short-term as well as long-term capital gains. So this really depends country to country. And, by the way, it's not tax advice. Do your own research, consult with your tax professional about your own situation. But for example, in some countries, there is significantly higher short-term capital gains tax on these assets versus long-term capital gains tax. Again, depends on the jurisdiction we're talking about. But in general, needing to evaluate the tax potential on a trade-by-trade basis is something that is significant to the digital asset space. That there's a lot of volatility in these assets. And when you are, when you have volatility, you have opportunity, but you also have risk. But thinking through the tax implications, for example, in many jurisdictions, if you are going from US dollars into Bitcoin, and then from Bitcoin into another digital asset such as Ethereum, and then from Ethereum into another digital asset such as Litecoin, at each of those points, there's a moment that needs to be evaluated in terms of the potential from a tax perspective. And back to another point you made, Brett, thinking through some of these really sizable bull runs in the digital asset space. Some investors have been a bit hesitant to really cash out on some of these positions because of the tax implications. Some areas that are starting to develop around this, though, are, for example, collateralized loans. So much like a investor might take out a loan on stocks or a mortgage on a property to capture a bit more liquidity without a taxable event. This is also becoming an increasing facet of the digital asset economy. Another area that's starting to become popular, for example, in the United States, is self-directed IRA accounts with digital asset exposure, where there's ability to kind of invest without some of those considerations. And then beyond that, though, for example, from the Cayman wealth management perspective, a Cayman fund itself, as a an investing entity, does not pay those taxes on a trade by trade basis as an organization. Certainly, and of course, a investor from any jurisdiction that's investing into a Cayman vehicle has a duty and responsibility to pay their fair share of taxes to their governing tax body. Be that in the United States or in Hong Kong or Australia or what have you. But to that point about capital gains for the institution, one thing that is helpful about that Cayman structure is that it can separate out the tax consideration for the overall investing institution, can separate that out from the question of what is going to be the best investing decision for the group itself. And so that can reduce a significant amount of the kind of the let's say friction in the decisioning at a group investment level.
Excellent. Yeah. And we're speaking with David Doss, and you can find him by going to ckc.fund and or perhaps searching social medias, which we'll talk about here in a minute. So I have a thing for you, David. So practical application of all this. We found for the clients we work with that they want to get out and they know when it's to get out, but they're frustrated because they have these multi-million-dollar gains. In fact, I'll tell you about a deal we helped the client with. She worked for a big tech company out of San Jose, and she bought Bitcoin, and she bought it for about $50,000 over a period of time at a very, very, very low basis. Well, that valuation of 50,000 turned into 50 million worth of Bitcoin when Bitcoin was 54,000 a coin. And so at 54,000 a coin, she exited 5 million, deferred about $1.85 million of tax without moving to Puerto Rico, right? Without collateralizing the loans, which we saw the challenges with that when some of these groups just collapsed, right? Without having to put it into an IRA, while being able to diversify the wealth, invest into a startup company. In fact, part of her dream was not to build Google's dream, was to build her own dream with like a Khan Academy, online education academy with her college roommate. And so they're building this thing, and it's like fantastic and it's exciting, but she did it when 54,000 a coin, right? Now the valuation went up to 60, 65, 67, 60, I think it ended up about 69, right? And I called her every time, like, hey, you want to exit some more? Because your 45 million at this point is now grown well, surpassed that. Now she ended up not doing that, but the plan is when it comes back to do a lot of this. And so the point is, we were the first to do this with something called a deferred sales trust. Most people don't know about this. It works for any asset of any kind, as long as this has at least $1 million net proceeds, $1 million gain. We also did it with Ethereum. Another client, he worked for Ripple, right? So the XRP. And for him, he bought Ethereum. It was his and Bitcoin. Same thing. He lived in the Bay Area, and he exited over a period of time about 7.5 million during this run. And for him, it was that diversification. It was a proven tax strategy, not having to move overseas. Everything's fully reportable to the IRS. It's all there to see. And it's through this strategy called a deferred sales trust. It's kind of like a 1031 exchange. It's kind of like an IRA. It's kind of like a 401k. But it's super flexible. You can invest back into real estate, back into crypto when the market makes sense. But here's the key. You can diversify timing, which I think is so key. It's not just about diversifying a different asset class. It's about diversifying timing. And so our anticipation of the next bull market run is, since we've already proven the model, we've already had the case studies, that we'll see a massive amount of exits to diversify and to invest into real estate, and or just to wait for the crypto opportunities because of that volatility, to go back and buy low, all tax deferred, right? And so that's part of why we wrote the book, Building a Capital Gains Tax Exit Plan. If anyone's interested, you can go to Amazon, hit #1 bestseller. Kevin Harrington from Shark Tank's in the book, and we had a couple others too talking about all of these things. But Dave, I'm just curious, what are your thoughts on all of that? Have you heard anything like this before?
So I really like your point about diversifying timing and also, diversifying the assets as well. So there are, ultimately, I have some friends and colleagues who are, exploring different types of trusts, and for those who, let's say, might be married with kids and maybe not wanting to kind of relocate, across the ocean. That can be a viable option in some cases. They're, ultimately, I think these decisions are very person to person and dependent on, on particular situations. But at the overall level, be it a trust or an IRA or offshore investing, as long as it is legal and compliant and does the job that a particular investor or individual needs it to do. I think there are a lot of interesting opportunities. It certainly is a very significant challenge in the digital asset space because of that sheer level of volatility that you could go for 5, 10, 100x on some of these digital assets, and you could see a lot more investors know that they've hit the top than there are investors who sell at the top because of those considerations. So to the point of other ways to help achieve some of those or help to address some of those challenges. For example, one area that we found very interesting about Cayman investment fund structure is that they can accept digital assets as a form of investment, whether it be into a digital asset fund or a real estate fund or a equities fund, fine art fund. You get the idea, right? So thinking through that, one area that we have been looking to provide additional value to our investors is to be part of an overall network of investment funds where there is peer-to-peer liquidity across these positions. Because whether it's a question of digital asset investing or private fund investing or both, liquidity is an issue for logistical, tax, and other considerations, right? So one area that we've been looking to help our clients in is to have the ability to invest in the form of digital assets, and what the tax implications or lack of tax might be for that is really going to depend situation to situation. But have the ability to invest those unsold digital assets directly into an investment fund vehicle in things ranging from crypto to real estate to stocks, but then also to have the optionality to then move that investment position from one asset class into another across a network. So again, I think there are many ways to help solve for that, but I absolutely agree that is going to be a huge consideration in this next bull run, where a number of analysts across different spaces, ranging from traditional finance to kind of crypto native, have been predicting a range of roughly 100,000 to 350,000 for Bitcoin in this next bull run. Where certainly, if you ask any one person, you could get something ranging from crypto is going to go to zero to Bitcoin is going to be worth $1 million by tomorrow, or some claim like that. But if you look at kind of the median predictions, or kind of the majority of the most credible predictions, they do fall into that range. Where thinking through current prices of Bitcoin and 30,000 or so, the sheer level of capital gains implication to go from that to somewhere in the 100 to 300 plus range is going to be extremely significant and needs to be solved for.
Absolutely. And that's why we want to help you build a capital gains tax exit plan and a crypto capital gains tax exit plan if you're selling crypto. We've done it with Bitcoin and Ethereum so far. We're here to help you create a plan and have a team in place to help you execute that plan. Go to capitalgainstaxsolutions.com to get started today on a no-cost consultation if you have $1 million net proceeds, $1 million gain on any single transaction. That being said, Mr. David Doss, are you ready for the lightning round?
Oh boy, ready as I'll ever be.
All right. If you had a chance to go back to your 20-year-old self, what's the one golden nugget make sure to tell yourself to do?
I think to your point about superpowers is to really focus on embracing strengths and leaning into them while recognizing and being compassionate around weaknesses is a major category.
Fantastic. Question number 2, what's the number one book you've recommended or gifted the most in the past year?
Oh my gosh. Firstly, to kind of divert the question just slightly, I think just the major advice would be read, almost regardless of what it is. But one thing that I found really helpful for myself, both personally and professionally, is I made a commitment last year to read a book a week, and then this year I'm on track to do 60 plus books a week. I remember, I think the exact number, is maybe a little bit arbitrary one way or another, but I remember hearing in a book from, I think it was Grant Cardone, he was talking about how the average Fortune 500 CEO reads somewhere north of 60 books a week. And I thought, I can do that. And I have been able to do that. And I would say that as an overall category, reading from a personal, professional standpoint has been something very helpful to me. But back to your core question there, one book that I found really fascinating on this whole topic of value around the world is a book by David Graeber, Debt, The First 5,000 Years. And I think that for anyone that's interested in kind of the meaning, personal, institutional, anthropological, economic question of debt, of value, of monetary policy, it's a really big eye opener.
Amazing. David, we're completely out of time. So I want to, first of all, thank you for being on the show. I want to thank you for sharing tons of wisdom about building wealth with blockchain and crypto wealth management. I want to encourage you to keep using the gift of connecting the dots to build systems to help people build wealth, but also connect the people to make a difference in this world. For our listeners who want to get in touch with you, would you remind them one last time, what's the best place for them to find you?
Yeah, so firstly, email or LinkedIn as well work great. So would love to hear from you at info@ckc.fund. I'll see that alongside my team. I'm also active on LinkedIn. My URL is David Ambrose Doss. Beyond that, there's also a phone number on our website. We have other social media as well.
Amazing. Thank you, David. And thank you to all of our listeners listening on the Capital Gains Tax Solutions YouTube channel and our podcast, and also the Expert CRE Secrets podcast and YouTube channel. As always, we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy. Using a proven tax deferral strategy such as the deferred sales trust is an amazing way for you to exit highly appreciated assets. Don't get caught being trapped, not selling when you want to sell the assets because you know it's a good time to sell, but the capital gains tax is holding you back. We want to unlock the ability to exit and diversify the timing of investments while deferring the capital gains tax without moving to the Cayman Islands or to anywhere else overseas, right? Just keep it simple, right? If you'd like to learn more, we'd love the opportunity to help you out. Go to Amazon, check out the new book, Building a Capital Gains Tax Exit Plan, and or just go straight to our website, capitalgainstaxsolutions.com. Please share this with someone it could make a huge impact for. We so appreciate everyone out there.